right, boom. I like being back at the normal setup. I got the lights and everything. Cool. Yeah, I mean, NVIDIA, SMH, Micron, AMD, I'm sure they all followed. I haven't even looked, but I can guess that they did. Yeah, the market ended up selling off a little bit at close for sure. So we'll see. I mean, again, I don't want to just like write off what happened yesterday and over the weekend. No, it wasn't job earnings report. We have jobless claims Thursday morning, as always. The market was actually really strong today, and then it ended up kind of ending the day selling off a little bit. It's not like we like made new lows on some things. I think Microsoft's a little bit weaker than most, but we'll see. I'm sure my event is started by now. So yeah, Thursday jobless claims always comes out 1 hour before the open. That's just a weekly thing that always happens. So, that'll move the market a little bit, but I don't know. You guys have any other questions on other things or any other tickers you want me to cover before I get into this SMCI stuff? Yeah, definitely. I see your screen. I hope this will work for me. Let's see. What'd you get? Microsoft 440 call. Yeah, it might. Ferg, I don't really know. I don't really know. You know me well enough. I'm a really quick day trader, so I wish I can give you a perfect answer on that, but I do think that your kind of style right now is buying a couple week out calls on things. I haven't really seen you buy any puts ever. And I never want you to just think that things will always go up. I mean, over time they do, right? Yeah, definitely a positive guy. He's definitely not a bear. Are those puts? Before we call. Oh, okay. I must have missed that. Yeah, Tesla puts. I mean, that could work. Oh yeah, okay. That put. Yeah, you made some money there. Yeah, I remember that. So yeah, I mean, again, Farouk, for example, I mean, I don't know. It seems like your style right now is just kind of taking bets on bigger moves, I think. Not so much my style, right? Just kind of taking like really quick, small trades. I'm really good at just being very unbiased and waiting for the market to tell me what's going on rather than trying to pick bigger moves. So, I mean, whatever works for you, for sure. I mean, I don't want to just like, write off what you're doing at all. So, I mean, if it works for you, it works for you. Yeah, if it was cheap, a lot of the times when things are cheap, though, that means that not many, it'd be expensive for a reason, right? So, I don't know. I mean, things could always, anything can happen. I don't know what's going to happen, and that's a reason that I'm good at what I do, is because I don't try to predict what the market's going to do. I rather it make its move and show me what it wants to do, and then I take advantage of those smaller moves. I'm just not very good at making big time frame predictions. I can look on a big time frame and show and tell you where I think it can go. But that doesn't mean that I'm going to put money on the line to win or lose on where it's going to go. You know what I mean? So we'll see. I also think that you go really far out of the money, which makes it even harder on yourself. So, what's up, Lee? Missed you, man. I wish I could have seen you in Florida. But all right, so let's see, what else did I miss here? I'm having trouble with strategy. Seems like mine goes opposite of what market is doing. I generally wait for retest once market opens, but that happens. I buy on the retest and then I'm losing in 12 days straight. So I mean, not to be like blunt here, but that means that you need to think the opposite of what you're doing, right? If you're losing most of the time, that means that you're thinking the wrong way. I mean, it's very easy. This is why most people lose. I mean, anyone can open up a brokerage account and buy something, and it goes the opposite way, and they lose, and they think the market's rigged and all that. And yeah, maybe the market's rigged a little bit, but that also means that you need to try to think in the opposite manner. And why are things moving the way they do? Why are you losing money? Why are you buying where you're buying? And why is it not working for you, right? So again, if you're really new to trading, you're going to run into plenty of problems. I'm trending on X. Yeah, well, hope so. I doubt it, but we'll see. So yeah, I mean, I don't know exactly what strategy you're using. I don't know what kind of break and retest you're using. Again, it's like I have almost 6 years now trading, and I've traded plenty of different ways, and they don't work for me. So over time, I realized what I'm good at, what I'm not good at, and I cut out the things that I'm bad at. I mean, it could be as simple as I lose money most of the time if I trade after 11 Eastern time in the morning. So what does that mean? Well, I need to stop trading no matter what the setup is after 11. It's little things like that. But the only way to get good at trading is making mistakes and learning from them, and actually putting the effort into critiquing them and changing those habits to where you can find that little niche that you're good at and stick to it. That's really all it takes. There's unlimited ways to trade the market. Once you find your way, you stick to it, and you go from there. All the analysts here, I'm sure, can tell you the same thing. They tried plenty of different ways. They found what works for them, and they stick to it. Yeah, well, I mean, DPOOTO, I don't know how to say that. That just means maybe your sizing is wrong, or your stop losses are wrong, or your targets are wrong, or your entries are wrong. So, again, like I was in the same boat as you. I'm sure everyone here was. They felt like the market, all they could do is lose. But all it takes is putting in the effort to figure out why you're losing. Are your entries bad? Like I said, entries, exits, target, stop losses. What's the market doing? What's the stock doing? Where, are you buying options way out of the money? Are you buying options in the money? Is your position size way too heavy? There's a lot of factors that go into that. So way out of the money options, like just to begin with, you're fighting an uphill battle, right? It's way harder to make money in out of the money options. If I'm buying really far out of the money, I'm looking for a big move, but I'm also sized really small. Because if that move happens, I can make a really big amount percentage wise, and it maybe adds up to a normal day trade for me. Or I'm okay with, percentage wise, again, a bigger loss. Like I'm okay with the 50% loss because I'm going in with, let's say that our normal position size is $5,000. But if I'm going to buy really far out of the money and I'm going to go in with $500, I'm more than okay with losing 50%, which would be $250. But on a day trade, if I go in with $5,000 and I'm okay with losing 10%, that's $500, right? So, I mean, it's all relative to your account size, what kind of trades you're looking for. It sucks to say it, but if you think that you're going to start day trading with $100, it's just not going to work. Can it? Sure. Have people made it work before? Yeah, maybe. But is it going to be extremely hard? Yes. Yeah, I mean, 1K. Okay, so you should be happy with $10 to $20 a day, right? A lot of people start, they put their $1,000 account, and that's typically where people start, and they want to make a couple $100 a day. That's just not possible. I mean, okay, I don't want to say that. I mean, is it possible? Sure. But if you're looking to make $100, $200, $300 a day on a $1,000, $2,000 account, that also means you need to be risking about that much. So you take 2 losses at $200. Well, your $1,000 account went to 600. If I have $1,000 account and I lose 50% of that, meaning $500, I then have to make a 100% gain on my account to get to $1,000. That's a lot harder than making a 50% gain on $1,000 account, right? So, again, I'm not afraid to say it, but having a very small account is super hard to trade with if you're looking for aggressive gains. You got to think the S&P on average, I think, is about 7% a year. If you can do 1% a day, 1% on $1,000 is $10. If you make $10 here and there and over and over and over again for a couple months, well, next thing you know, you're like, man, that was easy. I wasn't looking for those multiple $100 days, 150% days, whatever. And then you're like, okay, well, now I'm at $3,000. Well, 1% on 3,000 is now $30. And then it just exponentially grows from there. Right. So, again, people start with small accounts. They want to make a lot of money, and that's where they blow up. Right. That is where you get emotionally attached to the money. And a lot of people want to have a weekly goal. I want to make $100 a week. I want to make $500 a week. I want to make $10,000 a week. It doesn't matter what it is. When you're searching for a money goal, that's where you're going to get in trouble as well. Because let's say that my goal is $500 a week and I made $350. And it's Friday and the market's chopping around. There's no good trades, but you are set on making your $500. So you need another $150. You're going to go in there, and rather than sitting back and saying, you know what, market's not doing that much, I don't really, I shouldn't take any trades, I'm going to step away. You're going to go in there and you're going to try to take a trade, and maybe you lose $50 there. Man, I got to get that back. I like that 350 now, but now I'm at 300. Oh man, that's another $100 loss. Oh, okay, now I'm at 250 or $200. And I mean, it's as easy as that. And then you just go on a death spiral, and you can lose your entire week's profits. You can blow your entire account. I've seen it happen. I've done the exact same things in my early years, and that's why I can teach it. I mean, but all that comes down to is discipline and your psychology behind it, right? It's really not that extravagant. It's not rocket science. It's very simple on what you need to do and what you shouldn't do. But it's also very easy to slip up because money is involved. And a lot of people are emotionally tied to their money. And you're going to make bad decisions. And besides living with it, you're going to try to get it back. There you go. Well, then all you need to fix, DP, is I'm going to make my $10 or $20 a day, and I'm going to move on. That's it. And of course, there's going to be the home run days. If you're used to making $10, $20, maybe one day you make $100. But let's say you do that on a Wednesday. You show up on Thursday and you think you're going to do that again? Absolutely not. To me, I'm like, if I have one home run a month, I'm happy with that. If I have one a quarter, I'm happy with that. I'm never looking for the home run. They're just going to happen. Okay? Because I'm there trading consistently. We use the term home run. It really does tie into baseball. If you hit those singles, single, you get a double every now and then you hit that home run once a month, great. That's a big cushion for you. I mean, it's really that simple. Every analyst in here, I mean, Lee's in here, but I think everyone would agree with me on that. Any other questions on that kind of stuff? This is a really good topic for you guys. I'm happy to keep going on with that. A lot of people will make money goals, and to me, that's the wrong thing to do. If your goal is $500 a week, don't think that I need to make $100 a day. To me, I said this morning. I rather take 5 really good trades a month and make, for example, $5,000 than take 50 trades in a month and make the same amount. It's not worth it. It's not worth the stress. It's not worth the mental capacity on buying and selling and buying and selling and buying and selling and looking for and really studying the charts and being, at your desk all day. It's never worth that. So, again, it's like, I'm not going to let the market dictate what I'm going to do. I'm going to dictate what I do based on what the market is doing. If I miss an entry, if I miss an exit, if I miss a stop loss, never miss a stop loss, but really it's entries. If I miss an entry, let's say that I want to buy Tesla at 250 and within 1 minute it goes from 249 to 253, I'm just not going to get in. I'm not going to chase that because then my risk to reward is so much different. The huge gains will come. The huge gains will come. Once you accept the fact that I don't have a 10, 20, 50, $100 million account, whatever it is, again, 10, 50,000 and then, or $1 million, it doesn't really matter. It's all percentage wise. I've worked at a trading firm where they manage $2 billion. I go there and a lot of people that start who know nothing, they're like, okay, you can risk $500 a day. Well, I'm really consistent and I can make $300 to $500 a day. Okay. And the senior traders are like, yeah, okay, that's cute. You can always add a zero onto that. So that 3 to 500 is actually 3,000 or 5,000. All it takes is capital. It's the same trade. But if you have $1,000, you shouldn't be looking to make these insane gains. If you can't make money with a small account, you can't make it with the big account. Because if you have $1,000 account, you're looking to make $100, $200, $300. Well, then you have $1 million account. You're looking to make $100, $200, $300,000. It doesn't make sense, right? When you have a small account, it's all about the fundamentals, learning how to trade, learning the percentages, learning how not to get greedy, learning how to stick to your stop loss, learning how to make those base hits. And then all it takes is more money. So when I had small account, all I thought about was, okay, if I put my head down for a year, okay, I have $1,000 account. I put my head down for a year and I try to make $100 a week. What's that? That's $5,000 that year. I 500% gained on my account if I went from 1,000 to 5,000. That's insane. The S&P 500 is 7% a year. Okay, well, let's say that I do it for another year and I do 500% on that. That's $25,000. So if you just let the exponential growth of compounding your money work, you really can do it. But if you're going to focus on the money when you don't have much capital to trade with, you will forever lose. And that is your decision to make. It's really that simple. Yeah, for sure. I wouldn't say I have a hedge fund account by any means, but let's say that any of you guys can scrape up a $10,000 account once you're consistent. All it takes is putting in $2,000 to $3,000 a trade And then you can then make $200-300 per good trade. You take 3 good trades a week, you make $1,000 a week, you're making 50 grand a year, working for 1 hour a day. And then 2 years later, you have a $50,000 account. You're putting in $5,000-10,000 a trade. You're making 2-3 grand a week. You're making 150 grand a year. Again, I never want to put like money goals on anything, but you have to let the exponential growth do its work. And if you aren't consistent, the biggest reason why people with small accounts lose and blow up their accounts so often is because they're so focused on the money. They see people on Twitter. They see, a lot of stuff you see on Twitter is fake, photoshopped, whatever you want to call it. It's not real. Okay. So stop seeing the 15 to 20-year-old kids making 10 grand a trade and like buying Lambos and stuff. A lot of it's rented. A lot of it's just photo shoots. A lot of it's photoshopped. A lot of it is fake. Right, exactly. And you put your $1,000 in and you think that you can buy GameStop at 10 cents and it goes to 500 and you're a millionaire and you have a yacht and you're cool. It's really just not how it's going to work. Are there people that have gotten lucky and done that? Sure. I rather not aim for that over and over and over again and lose money. I rather just take it slow, make my 10% and move on. Because over time, if you can make 25% a year, and let's say that any of you guys in here trade for 10 years, okay? So think 10 years down the line, you've consistently made 10 to 20% a year returns, okay? That's a year, 10 to 20% a year on your account. It's really not that hard to go get money from people who have it. And, let's say that you have a $50,000 account and you made 20%. Okay. So you made 10 grand. You could go to someone with, whether, it may be a lot harder for others or whatever, but to get investment money, 100 grand to some people is nothing. Okay. So now you have 150 or $200,000. You make 20% on that. That's $40,000. Give them 30% of that. And you keep going and you keep going. So you always want to base yourself to like the S&P 500. A lot of people want to dump their money in that because it's safe. It makes them their 5 to 10% a year, and they move on. If you can beat the S&P 500, which is the goal for a lot of funds, you are then open to a lot of capital. So a lot of, the basis of this is just psychology. If you can get your psychology down, you will be successful. But a lot of it is going to be taking losses, making mistakes, making dumb decisions, but then making the conscious effort to fix them. I can promise you guys, everyone in here listening, whether it's Discord, YouTube, Twitch, Twitter, whatever, I've made every single mistake y'all have made, and maybe you haven't made them yet, and probably have done them 5 times over. I was 15 years old when I started. So think about that. Think about how dumb and immature a 15-year-old kid was. I've made every mistake in the book, and the only reason I'm still here and I'm actually successful now is because I made a conscious effort to fix them, and I found what I'm good at, and I stuck with it, and now this is my job. So besides thinking daily, kind of like Stickman's talking about, thinking about, I need to make $50 a day, I need to make $100 a day. None of that matters. No one in here cares about you specifically. The market doesn't care about you. So stop thinking that you can sit here and hope and pray about a trade going your direction. It's not. It never will. It doesn't matter if you have $100 million. It doesn't matter if you have $1 billion. The market isn't going to move for you. Okay, if you have $10 trillion, maybe you can move these mega cap stocks. But other than that, which I know nobody in here has or nobody in the world has, You need to put yourself in position to where the odds are in your favor. That's all I want to do. I want to sit here, look at the market, think, okay, the way that I trade would work really well if the market does this. If the market does that, cool. I take the trade. I already know my entry. I know my exit. I know my stop loss. I know what I want to see. I know what contract I'm going to trade. I know how much size I'm going to go in with. If it doesn't do that, what do you think I do? I don't take the trade. Very simple. I'm not going to be emotionally affected by green and red lines on a screen. How stupid does that feel? Believe me, I've done it. I've bought a stock up 200% thinking it's going to go 500%, and then it crashes 75%. I lose all my money. I've done it. And maybe you guys have too. So don't think that I'm making fun of you, because believe me, I've done it 5 times over. That's the only reason that I can teach this stuff. What other questions we got? I'm going to get into SMCI here in a little bit, but this is a really good topic. So don't be afraid to ask questions. No question is stupid. The only bad question is a question that's you don't ask me. In terms of indicators for a new trader, what should we use to keep it simple? So, good question. When I started, as many of you probably have done, I'm sure Lee could probably attest to this. I started and I went online and I looked at every single indicator I could possibly find. I added them all: MACD, stochastic, RSI, I mean, just anything in the world. And can they work? Maybe for you. They don't work for me. A lot of the time they contradict themselves. A lot of the time, I don't think that if it was so, like, the main thing that I want to talk about and what I've learned from, traders that have done it 40 years is, if it was as easy as putting an RSI or a MACD on a chart and it could tell you exactly what to do, everyone in the world would be a billionaire, right? If it was really that easy, everyone would do it. If this red line crossed this blue line and it told you to buy or sell, well, that's not that hard. Anyone can do that. That's just not how trading works. Stocks don't care about lines, and they don't care about indicators. Indicators are mainly used, like Chag's talking about, for confirmation. Can they help you confirm that you're thinking the right way? Sure. Should you blindly buy and sell because, like I said, a red or blue line cross each other? Absolutely not. So again, I started with many indicators. As I got more experience, I took them all off my screen. If you cannot read the bare bones of the market, meaning price action, price levels, and volume, you will never be successful. I use VWAP because over time, I think that VWAP is something that is important sometimes. Do I ever trade based on VWAP? Never. If it lines up with the idea that I have, then I will use it. And there are very few times when that actually ends up happening. But a lot of the times, it actually ends up working out. So that's why I kept it on. For y'all that are new, which I think are only a few of you, I've interned at a trading floor for the last 3 summers. It's a short-term trading floor, and I was expecting to see some unbelievable things. And yeah, maybe I did. Money-wise, experience-wise, as Shag is showing, my boy Wags. Hope you guys have all watched the show Billions. Some of the most experienced traders there, they don't even use candlestick charts. They use line charts. They don't have 50 charts up on their screens. They have one chart, and then they have a screen with 500 tickers on it. And they're looking at, okay, oil is doing this, energy is doing this, tech is doing this, cybersecurity is doing this. And they're making these massive trades based on what they're seeing maybe outside the office. What is the economy doing? Is this stock way undervalued? Is this stock way overvalued? A lot of them trade very short term. Maybe they buy and sell in one day. Maybe they buy and sell in an hour. Maybe they buy and sell in a month. There's many different trades there, and a lot of them trade very differently. Don't get me wrong, plenty of people there have candlestick charts and all that stuff, because I mean, it all comes down to the prices and the charts. But some of the people who've traded 40 years, they started trading before computers could trade. So they were trading, calling in their orders. I want to buy ExxonMobil at $15 a share, and I want to buy 500 shares. Boom. Okay, so don't think, again, that a line on the chart moving this way, going up and down, crossing this line is going to be a guaranteed reason why the stock is going to move X or Y, way. It's just not. A lot of it is psychological. Another thing I want to talk about is like they make they make fun of people on Twitter a lot in person at the trading floor, because my boss, who Chag talked about, who is the character, the real life guy who is based on that character, he talks about, you guys, I mean, it's asinine for you to think that you can go on Twitter and see someone who has 100,000 followers saying they're going to buy stock XYZ and it's going to go up. The big guys who are moving billions of dollars, do you think they'd even consider going on Twitter and telling you what they're doing? Absolutely not. A lot of them are thinking the opposite way that you are, and that is the reason you're losing money. So the best way to get good at trading is to figure out what you're doing wrong and why you're losing money, and then training yourself on how to think the right way. What could I have thought to make the right decision on this trade? If I wanted to buy Tesla thinking it's going to go up, what was my reasoning for that? And then why did it go down? What should I have thought? What information could I have found for it to go down? A lot of people see good news on CNBC at 12 o'clock noon on, I love just using Tesla as an example because it's a crazy stock, but let's say that Elon Musk is going to build another factory in Canada. Okay, why is the stock going down? Oh, that's interesting. 3 weeks ago, this was something that people were predicting. Elon Musk, bought a bunch of land in, I don't know, Georgia or whatever it is. Okay. Oh, that's interesting. The stock went up for these 3 weeks. People were expecting this. Once the news came out, people sold. That's kind of weird. That's a sell the news situation. A lot of trading is just psychological. And I think that's really the biggest thing I've been going over tonight now for 30 minutes. So I hope I'm not boring you guys, but that really is the biggest part of it. Being greedy when others are fearful, and fearful when others are greedy, right? When stocks are down a lot, that's to me where I want to be buying. And the normal person would want to be selling because they're scared. Oh my God, the market's going to crash. Think about 2 days ago. We saw the Japanese markets drop 10% overnight. Everyone freaked out. I had people in here even asking me if they should, I'm not calling anyone out, but asking if they should sell their long-term stocks. But that's the retail mind. And that's what the big money guys want. They want to buy your shares. Okay, you want to sell on a one-day dip? Give them to me. Because over time, and again, back to the firm, when, the head traders talk about everyone wants to be a bear. Everyone wants to short the market. Everyone wants to call BS when it's happening. And that's why most of the bear traders end up losing, because he puts the S&P 500 on a 20-year chart and he goes, which direction does it go? Are there pullbacks? Sure. But over time, where does it go? It goes up. So I'm not saying that I never trade the downside. I actually prefer trading the downside because that's a lot more aggressive and cleaner moves, because nobody wants to be the guy bag holding. And you saw that recently. Let me pull up SPY. I haven't even touched my chart yet talking to you guys, but let's look at SPY. The Japanese markets tanked. The SPY closed at 530 on Friday and opened up down here at 510. That's a huge move. What happened? Things end up getting bought up. So the people that are freaked out and selling, that's the opposite way that you want to be thinking. You want to be buying, actually. Did I think that things could probably roll over? Sure. I mean, I can make all the predictions in the world that I want, but the chart will never lie. So on days like this, I never want to come in with like a set in stone prediction. When there's A+ setups that are all lining up, believe me, I'm the most confident person in the world. I'm going to take this trade with size. I'm willing to lose a lot of money because I'm looking to make a lot of money. But when things are unclear and they're not lining up the way that I want, I'm not going to change my trading strategy based on what the market's doing. When there's big moves in the market, like yesterday, a lot of people want to put a lot of money into those trades. Oh, the market's moving crazy. I can make a lot of money. That is when you're going to lose the most. It's all a psychological chess game. If you bought options yesterday, no matter if it was calls or puts, the VIX was way up in the air, meaning contract prices went through the roof. All those premiums, right? So think about a balloon inflating crazy, right? Options market, dealers are going to make the option prices way, way, way more expensive because the market made a big move and a lot of people are expecting a crazy move, and then the market chops up and doesn't go anywhere. If you bought a share, okay, well, maybe you didn't win or lose a lot of money. If you bought options, those contracts lost value so quickly because the market did nothing. So it doesn't matter if you bought calls or puts, you lost money. So, again, it's just all a psychological, just chess game. Do patterns really matter, or is it mainly momentum? So patterns do matter. And I have lessons over that stuff that I would love to share with you, and I can talk about that here in a second. Give me 1 second though. I'm gonna go to the restroom. I'll be right back. All right. Try to make that quick. Okay, patterns. That's it's actually a really good topic to bring up. So, when a lot of people look at patterns and they think that it's lines on a chart. Yes, you can draw the lines; they can make sense. Does that mean that a stock that's worth hundreds of billions of dollars is going to go up or down? No. What do the lines actually mean? So today on NVIDIA, perfect example of what I was looking for. So this is kind of what's considered a bull flag. You have, a downward move. You kind of have, and I have these like rectangles drawn of kind of where I think buyers and sellers could be. Big reason why I use VWAP is we bounce right off that today. So this line right here, why did I draw that? Why did I draw this? The main reason why I drew this is because of the top high. I think this was going to go up. We had a high of day here. We had a high, we had a test of it here. So why did I draw this line? So what does that line mean? I hope all of y'all are looking at this chart. When we break this line, if I'm thinking that I want NVIDIA to go down, I want to short it and I want the stock to go down. It's made this downtrend. So it made a high here. It made a lower high here. So buyers couldn't get it past these levels up here, and it rolled over. Bounced again, tested it here. Buyers couldn't push it higher, it rolled over here. No one was willing to buy it higher. Once it broke this line, what does that then mean? Does it mean that it just crossed the line? Okay, maybe. Is that the reason the stock went up? No. This is why I think that the stock went up on a short time frame sense. That was the first sign that people shorting, wanting the stock to go down, were then underwater. What do I mean by that? They broke the downtrend, so the stock stopped making lower highs. Once it broke that, that's the first sign that sellers are then losing. They finally made a new high on this. So if I'm shorting a stock, that means I sell first and I buy second. Just like if I buy something, I have to sell to get out of the position. If you sell first, you then have to buy. So the people that are selling, oh shoot, we just broke this downtrend. I have to get out of the position. I need to buy. Well, then there's other people on the other side thinking, I want to buy it because I want this to go up. So there's double buying. So that's kind of the psychology behind a short squeeze. So sellers are buying, buyers are buying, buy, boom, boom, boom. Sellers get pushed out of the way. The supply is then gone, and then this goes up. This went from 104 to 106.50. I was in this move around this area. Why did I take an entry there? We had rejections here, rejections here, rejections here. We broke through. I took some positions here, thinking this could go through the high of the day, right? Breaking through 105. Got up there, pulled back. Bounced, pulled back. Bounced, we bounced right off VWAP, broke the downtrend, added more, gone. Yes, I did stop out here for a little bit, but I wanted to keep, because this could easily just roll over and die. The market's been weak recently. I don't want to sit here bag holding something I think is going to go up, no matter if it's the best company in the world. Once it then broke the downtrend and confirmed to me that, okay, this might actually be the move, got back in, caught the move, it made up for my loss. I was green on the day. Okay. The reason that, I don't know if some people are red or some people are green. People that were red, they traded that move with the same size. I bought in with 50% of what I wanted to be in with, because I knew that I was going to add the rest of my position on the high of the day break. When it pulled back and I stopped out, I was in with 50% of what I wanted to be in with. So my stop loss was half of what I would have considered a full stop loss. When it made this move, I was then in with my entire position. And I made, let's say that I lost 10, 15% here, but I made 10 to 15% here, but I was in with double the amount of money I was in on the first loss. Well, then I made 50% on my loss. So let's say that I lost $100, but I made 200. Okay, so it ended up the day green $100. I was up more than that, but I'm kind of putting that into perspective for you guys. Like, I lose 100, I can make 200. When the move to me, and could I have lost on that trade? Could that have rolled right over? Sure. But I was more confident once this actually played out for 20, 30 minutes and it actually made the move. I put more size on it. I made the same amount that I lost percentage-wise, but I was in with double the amount of money, so I ended up being green. A lot of you guys trading one or two contracts, it's very hard. This was a hard trade. It wasn't easy. I can never have perfect entries and exits. Sometimes I do, but sometimes I don't. And that's when sizing comes into play. If you look at NVIDIA again tomorrow, SMCI gave us a new dip. Yeah, so let's go into SMCI real quick. That was a great question. Whoever that was, I think it was DP. And I have lessons on that stuff that I can go into as well. If you guys are free, I do very in-depth lessons on patterns and psychology and all that stuff for my premium guys. So I can only give out so much for free. Anyways, SMCI. So what do I think about this? What has been the theme for stock splits? Well, when NVIDIA announced their stock split, what did they do? I think they announced it back in here. Look at this. The stock went from 90, really 900, but again, this is post-split, 90 to 140. Almost 100% gain. Okay, call it 75%, whatever. What did Chipotle do? They went from, 55. This was, a really expensive stock, but they went from 55 to $70 a share, 50% move. What was the other one? AVGO. What did this do? They announced a split in this area. What did it do? 130-ish to 185. Around a 50% move. So the fact that SMCI fell is interesting to me. If I'm at the firm, they're talking about, the theme recently has been buying stocks, especially semiconductor stocks like NVIDIA, AMD, whatever it is, that are announcing a split. The stock runs up, and then you short it post-split. After the split, what did NVIDIA do? NVIDIA split here. It went up a little bit, and then, so it split at, $1,200 a share. Now it's at, $120, $125, went to 140. Now it hit a low of 90. What did Chipotle do? Chipotle was a crazy one. Chipotle split here. I think it was a 50-1 split. So it's a crazy split. But, it went from 65 down to 48. What did AVGO do? AVGO split up in here, 170. We hit a low of 130. So am I going to go with that theme? Yes. I think if SMCI goes under $500, I'm the buyer. I'm looking for this to run up. We have NVIDIA earnings at the end of the month. This is in the same space. I think SMCI can make that move higher. Am I going to hold through the split? Absolutely not. I could care less. I'm looking for a little bit of a move up, make some money, take my money, sell, run. Don't care if SMCI goes to $50,000 a share. I don't know what's going to happen, but I can look at what history has done, and these go up pre-split and sell off after the split, and I can go with that. I'm never going to be able to pick a perfect top and bottom, but I think down here around $500, good buy spot. This was once a $1,200 stock. It's down over 50%. It's in the same sector as the semiconductors, NVIDIA, whatever it is. I think it can go higher. Could the market crash and this completely sell off and I lose money? Sure. But where are the odds? The odds are in my favor that this is going to go higher. And that's where I want to position myself. Does that mean I'm buying calls tomorrow? No. Does that mean I may start a small position on SMCI if it comes down to 500, maybe under $500? Yeah, probably. I'd buy a couple months out calls, maybe 700 calls, whatever it is. If I can catch a 100-point move on this crazy stock, I'll take it. And I'll sell. Maybe it goes another 100 points higher. Couldn't care less. I get out, make my money. Stock splits, stock falls. Maybe I trade it to the downside later on. The easiest way to trade is to not pick tops and bottoms. It's to try to catch the middle part of the move, because that's the safest and easiest part to catch. And then you move on. That's really it. For you guys that are trying to make these crazy profits or buy bottoms or sell tops, that's probably why you're losing. I can almost guarantee that you are losing. So what do y'all think about that? Do you agree? Do you disagree? Have you seen any news on it? I'm surprised this is down on that news, which to me makes me think, okay, maybe I should look into some news that came out. Are there some bits and pieces of news that I should consider? But the theme recently has been buying things when they announce splits. They run up a little bit. I sell them, make my money. They split, they sell off. That's how the firm would look at it. That's how guys moving hundreds of millions of dollars would look at it. Yeah, I think so too. It's going to be expensive. I don't want you guys to put your entire account into this trade if I end up taking it, but this is what I'm looking at. I'll talk to the firm in the morning, see what they're thinking about it, and we'll go from there. But how do you buy in on a pullback? People always draw arrows as they execute the previous candle, but realistically, that wouldn't have closed yet, and it could reverse into a red candle too. So, to me, buying into pullbacks, so like today on NVIDIA, another example. I like to, when a resistance is broken, I'm okay with buying the pullback, but where am I going to be buying it? Am I going to be buying it? So Nvidia hit a high of like 106.40, came back in, bounced right off 105, bounced about 60 cents, came back under it, bounced about $1 again, fell back, and ended up making a move back higher. For me, a break and retest, if I think that 105 is the resistance, I would like to buy like as close as I can to 105. Am I ever going to get a perfect entry? No. But I don't even want to say her name. When a stock comes into the level, the resistance that is now support, I know that if it breaks under that level, I'd be out. So for this example, maybe I buy in here. My stop loss is here. Maybe I ended up stopping out of that, but I think that it can go to here. That means that I'm buying at 105, looking for a $1 move, and I'm risking 10 cents, 25 cents. That's a 1 to 10 trade. So looking for a $1, risking 20 cents, 1 to 5, whatever it is. So the risk to reward is there for me. I'm willing to risk small and look for a big reward. On this one, maybe I ended up stopping out, but I would take that trade. So yeah, I mean, again, it's like if I ever do a break and retest, I'm trying to buy in as close as I can to that support level, as close as I can to my stop loss. So if 105 was the support, I'm trying to buy as close as I can to 105. And, a lot of the times, if you sit there thinking I'm going to buy at 105 exactly, you're not going to get your entry. So, within 15 to 25 cents, I would consider buying. My stop loss is right under 105, and my target is 106. So I'm risking 25 cents to make $1. So that would be a 1 to 4 trade. So I could take that 4 times, lose 3 of the 4 times, and then come out break even. Does that make sense? So that's kind of, again, a lot of it has to do with your style. What are you looking for? What kind of like risk reward are you looking for? But and then, I can go into buying and selling areas and where buyers should be, where sellers should be, all that stuff. But, again, this is a free lesson. So those are things that I spend an hour talking about specifically on my premium stuff. So I can only give so much out for free. I didn't do 6 years of work or nothing. What else you guys got? We're almost done here. We're almost at an hour. Throw the questions my way. Throw the tickers my way. Tomorrow, I'm sure you guys are going to ask what I'm looking at tomorrow. Definitely NVIDIA, SMCI, maybe Tesla as well. Meta was very strong today. I'll be watching that. Again, I don't want to make any predictions, before nighttime hits because anything can happen right now overnight. So I just really don't care to make any predictions. I'd rather show up tomorrow, an hour before the open, see what things are doing, see what news has come out, see what earnings are coming out, and then kind of make a game plan. So I'm not live trading tomorrow, but for you premium guys, I will be in the chat with Ethan or whatever it's called, and I'll be talking about whatever. But very, very easy times to lose money. So my advice to you is to be careful. Don't be too biased. Don't be, don't think that you know what the market's going to do, because you may be trading 1 month and I'm trading 6 years, and I'm telling you right now, I have no idea what's going to happen. I can make predictions on things. Okay, like maybe NVIDIA can do this, maybe SMCI can do that, but do I absolutely know guaranteed? Absolutely not. And that is a reason I'm successful, is because I tell myself that and I live to that. I don't try to put all my money into a trade that I'm super confident in because I think that I know. Some people at the firm, some new guys say, well, I really like this stock. I really like this. And the older guys who have done it for 40 years tell you, I don't like anything. I like my wife. I love my wife. I don't love a stock. I don't like a stock. I think a stock looks good and can do this, but I don't like or love a stock, because then you're emotionally connected to it. You think that you're right. Same thing with GameStop. When GameStop was going up, everyone in the world downloaded Robinhood and tried to buy the stock. with no trading experience whatsoever, and they're still holding because they believe in it. They love it. There's a cult behind it. There's a community behind it. There's people that'll tell you that the stock is going to go up for X, Y, and Z. But do they know anything? Absolutely not. And the market, 90% of the time, is going to do the opposite of what they think it's going to do, because that's why most people lose at this. Gabriel, BLNK on YouTube. Penny stock, not really something I trade much. Kind of sitting here at support. I think under 260, this could probably fall 250, 240, and then 220 is going to be that next support. Maybe this could be a bounce spot, but again, BLNK is really not something that I have ever traded and would consider ever trading, just because it's it's really cheap, and I like to trade the mega cap stocks. I like to trade the companies that everybody knows. What would those be? Apple, Amazon, Tesla, Meta, Netflix, Google, stuff like that. They're easier to predict. There's a lot of money involved in the way that the stock moves. So for me personally, it's a little bit easier for me to make money there, and that's why I stick to it. We're almost at our time though, guys. Any last minute questions? Did you like that lesson? Did you, what do you have for me? Would you like me to explain things a little bit differently? Did you like it, hate it, love it? What kind of criticism do you have? For you premium guys, I'm always open to different lesson topics. I'm here for you guys. I love teaching. I can talk about anything in the world. But, this is recorded as well. So platform does trade. I know it's a personal opinion, but what I'm looking for. So for me, I use Charles Schwab now owns Thinkorswim. So I use Thinkorswim. This is what you're looking at. It's free. To me, it's the best charting out there. I used to trade on it for a couple of years. I now buy and sell on Interactive Brokers. I pay about $100 a month for what I use. But again, Thinkorswim is always something I'm going to recommend for new traders. Just because it's going to be a little bit intimidating because there's a lot of tools there, but I'm going to do lessons over that. I'm always here for questions or whatever. I've used it forever since I began. So I know it like the back of my hand. So yeah. Thanks, Chad. Thank you, Vans. Can you tell us what exactly you are going to teach us? Yeah, I mean, if you're going to come to premium, I sure can. Let me go to me and Duck's chat over here. 1 second. So my season 2, my first lesson, what brokers do I use? And then I'm going to go into trading setup. So like how I have my monitors and kind of what my screens look like, what I look for, stuff like that. Trading resources, what news I look for, what sources I look for news, earnings, all that stuff, option flow. Next, how to get into the zone, psychology within a trade, how to scale effectively, meaning how do you scale your account effectively, which I kind of touched on tonight. Day trading basics, candlestick patterns, what are options, market basics, charting 101, and then risk management. I am open to changing those if you guys would like. How much are private lessons? Can DM me and we can talk about that. But yeah, again, I'm open to changing lesson topics because I want this to be as beneficial as I can for you guys. I have a lot of recorded lessons in the past that I can go over. So, we can go from there. But yeah. What else do you guys have for me? I'm about done though. So any last minute questions? Can I start with reading patterns in the market? So that's going to be a little bit later on. I already have that as a lesson, Ken. So, but again, this is only premium stuff. So you're going to have to be in my coach's corner. If you want a one-on-one lesson, we can talk about that on the side. You just need to DM me and we can figure it out. Awesome, DP. Well, I'm glad to have you. I'll be live trading again Thursday morning at market open, and I will also be doing a premium lesson Thursday night. I do premium lessons every single Thursday night. So the premium corner, so you can either be premium or you can go into a coach's corner where you can either be with me. I'm more of a day trader. We have swing traders. We have fundamental traders, meaning they're more investors. We have people who do options like passive income. So it's very slow trades, but you can kind of slowly kind of rake in money. I'm more of an active trader. So I show up every day and I'm looking for the market moves, buying and selling most of the time under 10 minutes. And that's me, but we kind of have everything here. Cool. All right, guys. Well, any other questions, or we're gonna wrap things up? I think I'm done. I'll see you guys Thursday morning. A few premium guys, I'll be in the chat with me that I'm always in during the day for tomorrow morning. I'll post my trade ideas as well. Later. Dub beer, man. What's up, homie? All right, guys. Cool. If you have any question on the coach's corner, What the Duck is always here, and OG Nikki is always going to be there for you as well. And yeah, that's about it, guys. You have a good night. I will see you Thursday morning. And if you need anything, DM me or at me in the chat room, and I'll get to it. Later, guys.